Hello, everybody, and welcome to another edition of Let's Talk ETC. I have a pretty impressive guest with me today on the show, Richard Kastelein. He's going to be talking to us about initial coin offerings, or ICOs, as they're called. And Richard has a very impressive resume. I'll just say a little bit, and then he'll fill in more details. But he's, oh my gosh, he's started Blockchain News, which is a major news source on the web for blockchain information. He's organized blockchain conferences. He's a blockchain educator. He started Blockchain Partners. He's on the advisory board for over 20 ICOs. Yeah, wow. So welcome, Richard, to the show.
Thank you very much, Christian. Glad to be here.
All right. So I've already kind of given a lot of what you're involved with, but why don't you kind of give us the rest, or tell us where you're from, your education, so that the audience kind of knows more about you.
Okay, yeah. Well, my name's Richard Kastelein. I'm a dual Dutch Canadian citizen. I grew up in Vancouver, actually. But I've been gone from Canada pretty much since, let's say, 1988. So I went back to college for a couple of years, and I ended up becoming a journalist. I started my career in the Canadian Arctic in the 90s. Back in the days when we had to do halftones in the darkroom. We still didn't have digital cameras then, and we were pasting up our galleys and stuff. So it was kind of old school. And then I spent about 10 years in the Caribbean working in the media. So I've kind of my background is essentially in media.
Okay. Yeah, I have to. Let me just say something I thought was impressive. This is no kidding. I was looking for a news source. So in Google, I typed blockchain news, and your website came up on the front page of Google, which I thought that was pretty impressive. That's right, considered a badge of honor, right? If your institution, your entity comes up on the first page of a Google search.
Yeah, I guess so. I did well with blockchain news as well. Getting that on I had #1 for quite a couple of years. But it's more or less. My journey through life has been in the media more. That's sort of how I got into blockchain, and that's my background. I've been traveling for 30 years pretty much. I settled down the last 15 years in the Netherlands raising my family, but I've got 3 teenage daughters, and I live in Groningen in the north of the Netherlands. But previous to that, I did a lot of sailing, a lot of traveling, and a lot of bumming around, having fun, living out of a backpack, and doing all that kind of fun stuff that people sometimes do in their 20s. And eventually came time to settle down. And interestingly enough, I was in television for 5 years before I got into blockchain. And I was kind of on the cutting edge, I was on the cutting edge side of technology when it came to the television industry. I had a publication online called appmarket.tv, and, I wrote a lot of television. And at some point, I had a friend of mine who his son played with my daughter, and, he was a guy really interested in blockchain. He was a Dutch guy, and he was telling me about colored coins in 2014, and, I was like, this is really interesting stuff. And as I started to research it more and more, I was like, you know what? There's nobody really publishing anything really significant about what can be done with blockchain outside of Bitcoin, because it was all heavy on the coin, CoinDesk, Coin Telegraph, etc. So I thought, oh, well, let's just have a punt, as the English say, since I'm in London at the moment, and see what happens. So I wrote for about 6 months. Actually, almost a year without making any money. I considered it more of an open source journalism project. Mm-hmm. I was learning myself, but sharing the market intelligence with people. So its roots were quite idealistic in a way. And at some point, I was writing a lot about startups because that was what was interesting to me. I've worked for the European Commission, and I worked for Innovate UK as a startup judge. So I had a lot of interest in what was going on with young blockchain companies versus the incumbents. And as I started writing more, this is at the beginning of the ICO phenomenon. Really, I mean, Mastercoin was the first. Ethereum really, was a big play in 2014 and 2015, 2000. Then it started to really hit in 2017. That's when suddenly I had the companies that I was writing about saying, "Hey, can you give us some help with marketing?" And I became marketing. I was chief marketing officer of Humanic, which is a few years ago now, and got the playbook and figured out how all this stuff worked, and eventually just got involved in the next one, and then the next one, and then the next one, and now it's been 40 ICO projects that I've been involved with one way or another, and really enjoyed it. Really,
Wow.
Really had a lot of fun.
Oh, you just pointed something out that I didn't notice before, and when I was looking at your bio. So you started out with in media, like you said, which is distributing information, and then now with the way you described it, now it makes sense how you got into ICOs. So you had people approach you about marketing, and they knew that you had a website to get information out there, and presumably they asked you for ads for their ICOs. And
Yeah,
okay.
That's when it started. Then I started making money, and I was like, "Wow, this is great!" Finally, and at that time I was like getting one Bitcoin for a banner ad. I thought that was great. It was like 1,000 euro or more, and of course, a Bitcoin went crazy after that. But I never, for the next year, all of 2017, I never made it. All the money I was making pretty much was in crypto. So
Right.
it was an interesting year for me. And it was interesting to see growth. I mean, by the time this is kind of a funny story, but I was at a conference in Barcelona, one of Michael Turpin's conferences, who's quite well known. He's a Bitcoin whale, and a lot of people know him because he was the PR guy for Mastercoin and for Ethereum. I was on a bus going to the Gaudi house, and guy sat down beside me. His name was Peter. We got on really well, and he was an old school guy. I knew that he was about my age, but I'm kind of new school, so. And it turns out we were talking, and we ended up at the Gaudi house and talked some more. And I was like, "Oh, by the way, what's your last name?" He goes, "Peter Vicenis." Of course, for those of you in the know, that's like Peter Vicenis is one of the founders of the Bitcoin Foundation, along with Roger Ver and a bunch of other people. So he was really around since the beginning. And about 2 weeks later, I was in a conference in Zurich again, speaking at the conference about ICOs, and Peter was there as well, and he asked me out for lunch, and he asked me, if I was interested in selling blockchain news. This is so after 2 years of, 1 year of not really making any money, and then a year of like, wow, a little bit of success. This is great. I'm able to pay some bills, and if anybody knows, like writers, writing and journalism is not the most highly paid industries in the world. So it was never, I never really had a lot of wealth or anything like that. But yeah, Peter offered to acquire it, and I was at that time I was working on my own, doing everything. So advertising, designing the ads, hosting the website, keeping the hackers out, writing the stories. I'd written already 1,500 articles by December 2017. So I was burnt out. I was like dead. I was tired. I just, I was working 16 hours a day on this thing with 15 advertisers, doing pretty well, but when Peter made me an offer, I decided to sell it, and which I did last year. And now, since January, I've been pretty much focusing on helping, startups and ICOs that I like,
Right.
projects that have meaning to me, that I think that are important. So.
Well, I have to ask you a question. You seem to have the Midas touch. You did blockchain news for fun, which ended up a nice sale for you, and then you stumbled on the ICOs, and who knows how many what quantities of money are involved with there. But it seems like you're one of these that everything you touch is successful. Can we somehow learn from you or borrow some of that luck, or what's
Well, I'm trying to work with you anyway, Christian, on that, but I don't know. I mean, I think it's just, it's karma, right? You can't go everything into like thinking you're going to make $1 million out of it. You just gotta. I threw. It was a crapshoot, right? I gambled on blockchain news, but I put in the time. I took the risk.
Right.
I spent a year not doing writing and not making any money. I mean, some people might have given up. Other people might have stuck with it.
Right.
It's hard to say. I guess my only word of advice is, find a niche and, go for it. Now there's I'm a bit worried about the whole ICO advisory market because very much based on ICO bench at the moment, and I find that they're basing the the rating system for ICO advisors on quantity of ICOs, not quality.
Okay.
So you got guys that are doing 50 ICOs at the same time, which is ridiculous because they can't help. I mean, you can't even remember 50 ICOs.
Right.
I'm working on 20, and I feel like I give them all a fair, a fair piece of me. And I think the main value I provide to them is not just my name and the picture on a page, but it's actually my network, my Rolodex, my contacts, my the third-party services. I know, for instance, I know a guy that does nothing but work on getting ICOs on exchanges. That's his core business.
Okay.
I know another company that does nothing but work on getting ICOs on all the ICO rating sites. So you have one person. So you have all these niche third-party services that are kind of poking their head up in the market, but not everybody has access to these companies because they're quite, they're under the radar, and they're approaching me on LinkedIn, a lot of them, and saying, hey, I'm doing this now. Do you have, can you recommend me to your clients? And I'm like, sure, great, more services. So in the beginning, I was doing what I call end-to-end ICOs. So I was like, I would contract with an ICO and I would handle everything. I would subcontract to a bunch of different companies and hire and get them to work with me and then manage that whole process. But I've actually now I've pivoted my company into becoming CryptoAssets.io is now what I would call an ICO advisory company. It's agency, really.
Right.
So I'm a talent agency for advisors, good advisors. I mean, you're in there. We've got a few PhDs in there. There's some interesting people that I'm helping get advisory positions and working with them. So that's kind of where my business has gone in that respect.
Okay, good stuff. Now, most people probably know what an initial coin offering is, but just to be safe, can we step back a little bit and can you explain it for a few minutes? Obviously, you don't have to take half an hour, but can you just describe the bare bones basics of what an initial coin offering or ICO is?
The history of ICOs really begins with a guy named J.R. Willett, who's in Seattle. So in January 2002, he laid out the basic ideas behind Mastercoin, this crypto that he proposed. And the Bitcoin network could be used as a protocol layer. So there's a video out there of him actually explaining this, which is really interesting. I mean, it's now, it's 2018, this was 2012. And, he came up with this concept about, okay, here's the basic idea. You create a new cryptocurrency. Well, and in that time it was based on a fork of Bitcoin, but you basically create a new cryptocurrency and you pre-mine it and you pre-sell it. So you invite people to invest in your crypto, which may have utility value. It may not have utility value, and what happens with it is it ends up on an exchange. So you buy it at a reduced rate in an ICO, so you get like 50% off the token, or 30% off the token, or 10% off the token. Right. And when it hits the exchanges at the full price, hopefully it goes up. And I mean, when people, for instance, when they bought in on the Ethereum pre-sale before the ICO, it was 30 cents. Mm-hmm. Well, I think Ethereum's was $600. So now, people that invested in Ethereum did pretty well if they got in early.
Right.
And of course, that's the same thing with Bitcoin. And so everybody's basically, trying to tokenize the world almost. We're seeing, right now there's 4,000 ICOs on ICO bench listed.
Okay.
We're seeing up to 30 ICOs a day, at the peak season last year in say November or so. So it's pretty insane in a way. People are jumping in to raise money for products that really probably don't make sense in a way.
Yeah.
They don't really need blockchain, perhaps. And then other people are building stuff, that maybe don't have a relationship with blockchain, but yeah, it makes sense to tokenize it because they've got a community.
Now,
so there's lots of ways to look at it.
Sorry, didn't mean to interrupt. So I can guess a question that some beginners might have. So people use ICOs. You said one of the things you said was for fundraising, but the image that we all have in our heads when we think of something similar. We think of stock, right? In initial stock offerings. So
yeah, initial product offering,
right,
IPO. Yeah,
right, IPO. And so also people think, okay, we have Bitcoin, we have Ethereum. Can the world really handle 1,000 different altcoins? Can you kind of explain why how it's
well,
different or better than IPOs?
well, this is the whole thing, though. This is what they call a new asset class. Now, the solution, or the interesting part about tokens, let's call them tokens just to get away from coins, because I think tokens is more appropriate,
Okay.
is that they can act as a commodity, they
Mm-hmm.
can act as a currency, and they can act as a security. So they can actually morph, or they can be all of the three types, or they can be one of the three. So
Okay.
or two of the three. So, this is a new asset class. This is why the SEC and other regulatory bodies are having really a difficult time in kind of figuring out where to put this in the bigger picture. It's a threat and it's an opportunity. Why should people who want to invest in innovation, why should they, why should they have to make $1 million a year, for instance, like in the SEC in the United States? But yeah, I think in the future, with 1,000 different tokens and the tokenization of society, we're going to see more things like ETFs, similar, where you have maybe a basket of tokens, and you'll trade off against another basket of tokens. I mean, there's lots of ways to there'll be multiple different types of exchanges in the future. I think the important thing is what in this new ecosystem is the concept of network value. So, are people using your token? Is it being used for something?
Right.
Right now, if you want to talk about securitized tokens, or tokens that act as securities, not very many people are doing that because they're very worried about the regulators, because that's very close to becoming a stock.
Yes.
Because you're having dividends, right? You're sharing profit at that point.
Right. So do you think ICOs will? Obviously, this is an impossible question to answer, but in the future, what would your guess be to what percent of what was traditionally stocks, what percent ICOs are going to eat up of the market?
Well, I see already that the head of NASDAQ 2 days ago said that they would really consider doing a cryptocurrency exchange if the regulators figured it out in the United States. I mean, that's a pretty big statement.
Right.
If NASDAQ starts trading crypto, that becomes mainstream. That's it, right? We're already seeing the institutional investors. Let me tell you a story. In the beginning, when we used to do ICOs, we used to do something called a pre-sale. Now, pre-sale, we'd raise like 250, and then it was like, let's maybe raise 350,000. We call that a family and friends round. So we would raise money from people that we knew to raise money to do the ICO, because we needed money, the marketing and all that, hiring people. You needed money to get to build the community, and to get people interested in buying your token. So, but the weird thing now is, time shift 12 months later, and the institutional investors who figured out that they want to be in this ecosystem is in the pre-sale, because that's where the most arbitrage is. In our family and friends round, we used to give like bigger percentages off because they were helping us in the very beginning, like a seed round.
Right.
In the old world. So right now, the industry has morphed so much, and this is actually kind of disturbing to me in a way, because I'm still a bit of an idealist, and I like the idea of open source software, and I like the idea of these entities being run as foundations and not corporations, and profits not the the shareholders. I mean, I like the way that this new ecosystem was developing with Ethereum, but now we're seeing in the pre-sale, 60% of the money that ICOs are currently raising today is coming from pre-sale, and most of it's coming from institutional investors. So the average ICO is $12.7 million right now, and let's say 7 to 8 million of that is coming in the pre-sale, and that's coming from the likes of Goldman Sachs, family offices, big investors who want to get, they want the most arbitrage. So they, it's changed the whole idea of the way we used to do it with like a family and friends round to raise money to do the ICO, has now become the playground of the incumbents in the banking industry to make the most money in this sector.
Right. So, and see that they always, so that's interesting. So now if you wanted, one of the things you said, if you wanted to do an ICO now, instead of going to family and friends, you could go to big institutions, because they're now open to the idea of ICOs, and they'll help you fund your.
Oh
your
yeah, you'll go.
initiative.
I mean, there's guys brokering deals all over the place. So,
Uh-huh.
I mean, I had a guy contact me from Saudi. He organizes trips. An ICO that wants to raise money for a pre-sale can go over to not to Saudi, to Dubai, and get a meeting with like 15 different family offices.
Uh-huh.
And they pay 30,000 euro, and then they can raise 10, 15 million from the Middle East, or you have the same thing going on with the Chinese whales, and money out of Hong Kong, and you have the same thing going on with Wall Street or the city. There's lots of there's hedge funds that are getting involved now.
Okay. Now, just if I could be devil's advocate, so somebody that wants to raise funds, they could have an initial stock offering, and the institutional investors would look for them, or possibly help fund a startup company. But it sounds like what you're saying is they're more interested now in ICOs than in IPOs, or for some reason they think that this is going to have more growth.
No, they're not more. They prefer the IPO model to the ICO model because they get equity.
Okay.
I mean, here's how it works in the IPO world, right? And this is the way it works. The guy who founds the company ends up with probably 10% at the end of the day for his idea.
Okay.
Why? Because he goes through a seed round, then he goes through round A, then he goes through round B, then round C. Round D is like 100 million. So then the VC have 100 million wrapped up in this company, and they're hoping for an exit. Either they go to IPO, or they get an acquisition from somebody like Google. Because those are the two options. There's like a dozen or 15 what they call unicorns in Silicon Valley right now that are waiting to be picked up, or either do an IPO or get picked up. And there's the VC have like millions, hundreds of millions of dollars locked up in these companies, waiting, who are basically using all their profits for growth, like say Uber or whoever.
Mm-hmm.
They're not to the investors. A lot of them at this point, they don't make money actually. Most unicorns in Silicon Valley.
Okay.
So that's the problem there. What the institutional investors don't like about ICOs is we don't give them equity. And you don't get equity, at least not at this point, until securitized tokens become mainstream, which may happen. Securitized tokens are going to be just like securities, and then we're just basically doing the same thing as an IPO. Okay. But for now, they're happy with what they do like about tokens and the current market of ICOs is that they're liquid, so they can go resale, invest 10 million. And then the token hits the cryptocurrency exchanges, and it's worth double what they invested. So they're already at 20 million, and then they can actually sell off, and sometimes they're vested over a year, but usually they can sell off pretty quick, and they get their money out. They double their money in 3 or 4 months. So they're not locked into something for 5 years waiting for an exit.
So
that's what they like. That's what they like about ICOs. So everything else they don't like. They don't like open source software. Right. They don't like the fact they're being run as foundations, not corporations. A lot of them, So
it sounds like what you're saying is they like the liquidity so much that they're willing to sacrifice ownership, right? IP rights. They'll accept open source. They'll accept this little scrappy startup, but as long as they have that liquidity, interesting to say that's so important to them, more important than equity.
Well, I would say they're just hedging there, right? They want to be part of this market. There's too much money being made, right? I mean, if a company had come in and spent $5 million on Ethereum in the pre-sale, is an institutional investor at 30 cents. Imagine what that would be worth today. That would be worth hundreds of millions of dollars, if not close to $1 billion.
Right.
So, it's that kind of thing it's the Wild West. It's crazy. There's so much volatility in the market. I mean, that's where the money's made right now. When it's all stable, and you get like, with security, with securitized tokens in the future, which will be more stable, I think. Mm-hmm. The profit margins won't be as high, but or the losses won't be as high.
Can I ask you another basic question? So I'm old enough to remember the 90s when the web was taking off, and there was ridiculous amounts of money flying around the web space. And then I lost my shirt in the 21st century when real estate, people were betting on nonstop appreciation in real estate, at least in America. So the bubble is the word that comes up, right? Is this party going to eventually going to end, or is there going to be a correction? I mean, this isn't, see what I'm saying?
Yeah, I think if you follow the trajectory of Bitcoin and just draw a straight line, I mean, there's no doubt in my mind that it's going to be worth $100,000 at some point per Bitcoin. But I mean, I'm a pretty bullish on this, so I would say that the inertia that we have already from tokenization and the direction it's going, like we've gone now in the matter of 6 months, we went from venture capitalists owning like 80% investment market into blockchain projects to having less than 10%, because people realize that, hey, I don't have to go to VC and get a boot in the back of my neck anymore. Okay. I could just go and like do an ICO and keep the equity and keep 10% of the token allocation myself, and I'll even if I do it as a foundation, I'll still make money. I mean, I'll be rich anyway. But it's not so much about rewarding the shareholders anymore. It's about building a community of people that have passion in your product and use your product.
Right.
It's all about. And in a way, that's really what money is all about. Money is about a group of people that agree that something has value, whether it's a piece of paper that says $5 on it, or a metal coin that says £1.
Right.
So the concept of money itself, I think, is going to radically change in the next 5 years for everybody. I mean, we're talking about liquidity now being created from the bottom up rather than the top down. Now, this is interesting because central banks are kind of on this is normally their job in society, right? Is to decide how much money, and gets pushed. They don't want to push too much because of inflation. But we have some, when you're talking about our ecosystem of let's say crypto, is when you put caps on, how many, there's 21 million Bitcoin, right? There's you can't have inflation. There's built-in scarcity, right? It's not like you can keep printing dollar bills, right? Like in America.
Right.
There's a cap on it. Now, of course, economists argue against that and said, well, that's not, you can't operate a system like that. But actually, if we can get the cost of transactions down to near zero with proof of stake or some other, future algorithms and proof of consensus mechanisms that really work and are efficient, then we can, we'll be trading in Satoshis. We won't even think about Bitcoins anymore.
Right.
Going into decimal points. So it doesn't really matter. It's infinite both ways almost,
Yeah. So you said the institutional investors are dominating now, but one of the things you said was also that the venture capitalists are not they're losing in the popularity contest. Did I hear that correctly?
Well, it's funny you mentioned, Harvard Business Review approached me in 2017 and asked me to write an article on blockchain. And I said to them, well, why don't I write an article on ICOs? And they're like, what are they? And I said, oh, well, let me explain them to you. So they ended up publishing something for me, about venture capitalists versus ICOs. And I think a week later or 2 weeks later, I ended up in Silicon Valley at Draper University, who's one of the major investors, also in crypto. And I was talking about ICOs to a community of American venture capitalists who didn't really even know, most of them didn't even know what it was. And I was saying, well, this is a real threat to what you guys are doing because, there's no equity anymore. It's like you're not going to get equity. You're not going to get ownership. You're not going to get patents. You're not going to get corporation. You're not going to have stake, shareholders. This is not the way it works. Well, and I had guys in the audience who were like standing up and really challenging me that it was not possible, and ICOs were all scams and all that kind of stuff. I mean, that's always what they fall back on. Mm-hmm. And I was like, no, really, this is a new way. This is a new asset class, and you're going to have, the party's over for you guys. Where the same little club of VCs who in the United States you have to have over $1 million in assets, and you have to make over $200,000 a year just to innovate. Just to invest in innovation, which is ridiculous. You can go to a casino in Vegas and blow your child's college fund in a weekend if you want, but you can't invest in innovation because it's a boys club. It's locked in,
Right.
And you got to get wealthy, get wealthier. This is also about the democratization of investment too. It's about anybody. We live in an age, the SEC created these laws to protect Americans in the 1930s after the Depression, when there was guys running around America with, scamming people, and it was awful. But people in those days, they read about as much in their lifetime as maybe we read in a month. They didn't have access to information like we do.
Right.
You can Google, you can find out anything you want about an ICO. You can go to third-party services like ICO Rating or Smith and Crown, or you can go to ICO Bench, and you can figure out, well, those guys look pretty good, or they look pretty bad, or this guy's, So I think we live in a different world than when the SEC was created these. Basically the rest of the world kind of waits to see what the SEC is doing, because the SEC's arm is pretty long, and it's backed by a pretty big army.
Right.
So this is where the tension is at the moment. It's regulatory tension.
Okay. Now this might be a dumb question, but so you said that VCs were losing because they're not going to get equity and control, ownership of these startups. But then how come institutional investors aren't losing, or why are they?
Well, no. I didn't say. Let me rephrase this.
Okay, maybe I've misunderstood.
Startups are really interested in doing ICOs right now.
Okay.
First of all, it started with the blockchain ICOs, the blockchain startups. Within a matter of 6 months, it went from 20 the other way. All of a sudden, all the blockchain startups said, "Hey, we're doing an ICO. This is ridiculous. Of course, we want to do this." Because Ethereum, basically when Ethereum came out, the killer app of Ethereum and Ethereum Classic, by the way, is the fact that you can do ICOs on them, right? That's the killer app. They made it easy for everybody to do it. And this has changed the dynamic, but now it's spreading out from just blockchain startups. Now it's like all kinds of startups. I mean, there's a couple startups I'm working on that have nothing to do, but it's about building community and having a crypto as the center of, trading mechanism in that community. So it has other kinds of value. So I think that really the pressure point is coming from the actual startups wanting to do ICOs, not from, and that's where the VC are like, hold it, we're losing business to these other guys.
Okay.
But the VC and the IC, this is what was happening in the beginning of 2017. Now, at this stage, the VC and the institutional investors have figured out, well, this is the first plan of, this is their route in, is to go into the pre-sales.
Okay.
So where if it's like, we want to be part of this party, where are we going to get in? They want the best deal. They could drop $10 million into an ICO at the pre-sale level. Yeah, they want a discount for sure.
Okay, so you're saying both venture capitalists and institutional investors are looking for good ICOs, and they're open to investing in the pre-sale.
Oh yeah. Totally.
Okay.
They found that's where they found their little niche in the world. But it took some time, because in the beginning it was like pre-sales were for just a little family and friend round, Mm-hmm. Now that has morphed into like basically the feeding ground for the institutional investors and the venture capitalists to play in this new ecosystem.
I see. Now, you also said another thing interesting that I picked up on. You said that there's startups now that have nothing to do with blockchains that are also doing ICOs. So you don't have to have a blockchain company for your company to do an ICO. Yeah,
well, let me give you an example. I was looking through, I had a type form for our website for people that wanted to have help with ICOs. And, I have like 600 to 700 companies now that have applied to us. And I was looking through the emails, and I realized, because I was in the TV business, I realized that there was one email address. It said AmericanZoetrope.com. And American Zoetrope is for me, it's like, yeah, if you're interested in film, you know who Francis Ford Coppola is and George Lucas, then you know who American Zoetrope is, because that was the company they started in 1967, and they've done over 100 films, and they've won they've been nominated for 70 Oscars, and they've got 4 films in the top 100 films ever made. Like, wow, Coppola's contacting me. This is how weird the industry is. Somebody at American Zoetrope on Francis Ford Coppola's team is Googling around the internet trying to find some help to do an ICO. So anyway, I got in touch with them, and I was like super excited because, I love film, and I love the creative part of the industry. And what they really wanted to do was to build an online community that used crypto to fund new creative projects. So it was about independent film funding, and it was about trying to break the Hollywood system, if possible. I mean, where Hollywood, you got 5 companies. We want to decentralize that. Now, people, a community of people that vote for and fund films that they think should be made, not from some guy's office, one of 5 companies sitting in some skyscraper in LA going, yeah, well, let's, we need this to happen then and there. Like the ending's not sad enough, or, he needs to marry her at that point. All this, they have these recipes that work. And that's why, you always know, I don't know if you do, but I always know half the time what's going to happen next in the film that I haven't seen before, because conditioned to follow this. They call it the I can't remember the name of it now.
But I know what you're saying.
A
lot of people don't like that about big Hollywood film, that they seem to follow a formula, right? That they do. They're market tested to see which endings work, and so you can predict a lot of what's going to happen, and that's no fun. That's what you're saying.
Yeah, they call it the hero's journey. I got a big fat book at home, and you can see how that Hollywood keeps storylines over and over. That are natural because we've developed some of these storylines from Shakespeare and from Homer, even, the tragedy, etc. But in reality is a lot of great films. What do people want? I mean, Netflix is changing the dynamics of moving pictures as well. I mean, Netflix is now creating content. They're spending $100 billion next year on content, and they're basically looking at what the readers like. They're extracting data from them and figuring out, well, what are we going to produce that is going to make people happy? And they use data from viewers for that. So a lot of things are changing, but this is an example of a project. Okay, it's got a great community. I mean, American Zoetrope already has a community of 100,000 people, film fans. So they basically just want to introduce crypto into this ecosystem and allow people to earn crypto for helping review progress on films, and help vote for casting, and just basically fans become an integral process of making films in a way. And people that produce and direct and create films can have a relationship with fans before the film's even made. Now, this is a different way of doing things.
Right. So it's basically, I shouldn't think the ICOs are just for blockchain companies. Now, what you're basically saying, it seems like, is ICOs are for any company that's involved with money, which of course is every company. So then every company could use an
Well,
ICO.
it could be. Let me give you another example of DNA Ticks. I'm working on a project out of Israel. I mean, they have a really good idea. But I bought a couple of these boxes from my wife and I to take a swab and then send in and get our DNA tested. But I never actually did it because I read the small print and I was like, well, who owns all this? Who am I sending my DNA to? What is? And I was sending it to some company in Texas that was like giving me a waiver, like saying they could do whatever they wanted with it. And I was like, this is weird. So the idea about this Israeli company is they are using blockchain technology to create like a vault or a locker. You control your DNA. You have it. You can allow people to have access to it if they want to pay you in the tokens, or you can use the tokens to find out more about yourself and your family. You can use it for finding out, okay, what part of Africa did we come from? What color are my kid's eyes going to be? What diseases am I susceptible to? So there's a real use for the token. Now, a company wants to buy my genetic information, and they want to, they want it anonymously. That's fine. I'll take some tokens for that. And then maybe I'm even willing to give my identity and my, more information about who I am for tokens as well. So it's a way of tokenizing genetics, really.
Right. So it makes the distribution, allocation of funds much more efficient, and things that you wouldn't think could benefit from cryptocurrencies could benefit, because almost everything could benefit from more efficient movement of funds.
Well, not only the transfer to the security layer for my DNA too. The locker that's being built is based on the blockchain, right?
Right.
So you need a public-private key combination to access that information, and that's what I hold. I hold the keys to the to the vault for my. So there's a real practical use of blockchain as well there, even though not really a blockchain project. Even though blockchain fits in on the crypto side, and it fits in on the security side. So we're seeing a lot of stuff around health and identity that's pretty important. People talk a lot about identity now, where we control all parts of our identity: social value, our government ID, our genetic ID, maybe, this is kind of the reverse Facebook thing, where social media companies are going to have to pay us for our social value at some point in the future.
Yes, that would be good. I'd vote for that. That's a good idea. But okay, I think you've definitely given us a introduction to ICOs. You've shown how they have lots of benefits, and it's an alternative to traditional securities. And you've also shown how companies that maybe people wouldn't think could benefit from an ICO can benefit. Why don't we then, in the last part of the show, can you maybe give an idea of what we can expect in the near future, and then even beyond that with ICOs? Any thoughts on that?
Yeah. Well, I think that, I work pretty closely on a few projects with a fellow named Dr. John Clippinger he's an MIT scientist, and he's really doing some great thinking around, the future. And, this is a really rough stage. This is the pioneer, go west, young men kind of stage of the ICO space. Technology wildcatters, we're taking risks with very little data. There's people were getting funded, tens of millions of dollars on a white paper and a team, just an idea. This is really like 1990s in that respect. 1997 with the internet, 98. I think technologically we're more like 94, 93 with the internet. That's where we are with blockchain. But there's still a stream media that's very anti-ICO. You see a lot of that. I get very frustrated when I'm in a room full of people and someone's talking about ICO scams and scammers and the deluge of them, and everybody's like, but the reality is there's going to be some kind of Darwinian culling of all this eventually. We're going to separate the wheat from the chaff, whatever, at some point. And we're moving towards a more structured system, and basically Clippinger calls that like a quintessential Schumpeter paradox of creative destruction. And this is what happens when we move to, new economic systems or new structures in society, is there is a radical kind of uplifting, so we're moving from a wholly centralized system to, into decentralized autonomous systems, peer-to-peer networks of trusted and trustless services where there is no central control. This is a very different idea in how we operate. Right. It's not for it to be captured by special interests in many cases. It's almost like a BitTorrent for currencies. But this is crypto one. This is the beginning. This is Bitcoin. This is what Satoshi gave us. The smart contracts. Right. Sorry, go ahead.
No, I was going to say, so what? One of the things you're saying, if I understand correctly, is that the world, including the financial sector, is going to become more decentralized, and ICOs are going to be a big reason for that, and power is going to be more and more distributed.
We're moving away from the concept of ICOs and raising money for innovation. That's one part of it, but really, I think the evolution is where we're going is more towards tokenomics. This is the concept of economics and tokens coming together in kind of a fusion, not only in terms of language, but systems as well. So, tokenomics, what does part two look like? I think that we're looking at really, there's going to be a lot of, I guess, kind of a reformation in the whole system,
Okay.
The pragmatists are coming in and okay, we need to find some kind of regulatory structure. We need to, get this kind of organized. Right now it is fairly unorganized, but how do you do that in a decentralized manner? Do we self-regulate to a certain extent? You also got to understand that this ecosystem is borderless, right? So it's not like one country is running this. This is running like the internet. It's everywhere and anywhere. It's on 20,000 computers, around the world, whatever. So it's also difficult from a regulatory perspective for centralized entities, government to actually really control this. But so how does this play out in the future? as a community, and I think that's something that's going to be very interesting. But I think now we're really turning more towards smart contracts and exchangeable smart tokens. You know, and we're this new generation of tokens is kind of being adapted. We'll be able to adjust changes in order to preserve some states such as price stability or adjusted risk or diversity or liquidity, or they'll become more stable in the future. And this is something inconceivable under the current economic, financial, and monetary system, because it's the way things are being run on Wall Street and in the city in London is much different. It's got a lot of different actors and players who have different human human input into the systems, which essentially results in corruption to a certain extent. This is what happened in 2008. This is like greed, right? Greed is good. That was the 80s. Remember that?
Yep.
And we're able to, with these new systems, to create incorruptible systems, which is something new to the financial world, and I think very important in the future. I mean, if we can stamp out corruption, particularly not only, people talk about corruption in South America and Africa, but we have a lot of corruption in the West as well. We're not immune to it, despite what CNN tells us.
Well, that's obviously a positive, optimistic outlook. If we can decrease corruption by having software systems that there's less of potential for humans to do something nefarious, that would obviously be a great thing. I like that one.
When you start introducing AI and big data into these systems also, I mean, you're going to have truly intelligent, decentralized systems that maybe learn from its mistakes as well. So markets don't do that. They run away until they crash and burn. There's no feedback, no learning from past experience, no way for immediate correction. This is where the creative destruction comes in, to detriment of all but a privileged few.
Yeah. Can you just elaborate? There was two things that I think the audience probably are going to pick up on and say, hey, okay, that sounds like two phrases I need to know more about. You distinguish tokenomics from ICOs. So if you could just elaborate on tokenomics, and then you also said use the phrase smart tokens. Can you just elaborate tokenomics and smart tokens to make sure that's clear? Those two.
Yeah. Well, I think tokenomics is kind of the evolution of the ICO movement into, now we're talking about, okay, what is this transformation of the financial industry going to look like? What are tokens? What is the impact of tokens going to be? Within 5 years, is it a bubble like some people think, or is the inertia already? Is it moving along at such a speed right now that it's almost unstoppable? Mm-hmm. I mean, it's still minute compared to the global financial industry. Obviously, it's not even, it's like a mosquito on a buffalo, but it's still a mosquito.
Yeah,
I think that's important. So I'm actually doing an event in Malta on October 31st, which will be followed by the Malta Blockchain Summit. It's called Tokenomicon, and we're inviting 100 people from around the world. Mm-hmm. We think have a stake in this, from mainstream economists to people like John Clippinger, who will be heading this, to some well-known people in crypto, but also a lot of women. We're planning to have hopefully half women and half men. We want to be have a good diverse community there to talk about this. Mm-hmm. So that's really the distinction between tokenomics and ICOs. Is it's sort of the next stage. Okay, now we figured out. Now we're introducing all these tokens into this this new ecosystem.
So would you say so? With the phrase ICOs, focuses everybody's attention on the initial startup phase where they're just beginning a project, whereas tokenomics focuses more on making people realize that's just a small part of it. You're going to have all these wonderful institutions that are going to operate with tokens beyond just the initial fundraising.
Let's look at it this way: that the ICOs, and they're also called token generation events, by the way, TGEs, which is quite a popular term. And people are trying to get away from ICOs because it sounds a lot like IPOs, and they are quite different.
Okay.
So anyway, token generation events are are really, the birth of ideas and startups about what is the impact of what we're doing here.
Right. And that's just a small piece of tokenomics.
Exactly.
The token economy, an ICO or a token generation event is just one part of it. So
exactly.
Okay, I see. And then okay, smart tokens too. What was can you elaborate on that one?
Well, this is where Clippinger talks about smart tokens is introducing artificial intelligence which he thinks that can create an end to bubbles.
Oh, interesting. So, okay.
What makes these smart tokens truly intelligent would be it learns from his mistakes, so it can, it has a self-correcting mechanism built into it. So
okay,
we're seeing a generation of crypto 2.0 tokens, protocols, and platforms emerge that are grounded, in addressing high-value real-world applications. So, more kinds of tokens we're going to see that address identity, trust, reputation, know your customer, anti-money laundering, and other issues that are immediate and pressing to the mainstream global financial industry today. That I think that we're going to address more in the future. I mean, in the past, the first ICOs it was anonymous. People were investing Bitcoin, and you didn't even know who was investing. That's not really acceptable to any bank.
Right.
If you don't know where your money's coming from, then they're not going to let you turn it into dollars, or they don't want your money. This is
right.
a real danger of money laundering. But on the other, you have the crypto anarchists who don't really believe that they should need to give up their identity. This is more about government control. So we have these tensions in our own community as well between. So you have the idealistic factor who want to change the world and do great things with blockchain. Then you have the crypto anarchists who want to just basically, we don't want control of government. It's kind of it's kind of a hard-edged libertarian movement also. That don't want to be. They think privacy is important. They shouldn't have to give up information. Mainstream coming in and saying, well, look, you can't operate this way because terrorism, et cetera, fear. And we want to know where your money's coming from and who's dealing with it. You got to remember the roots of this whole ecosystem. I mean, Bitcoin wouldn't have gone anywhere without drugs for sale and hitmen for hire on the dark web, right? So its background is also shady, which doesn't help as well when it comes to the mainstream perspective on crypto. And no, they're not all scams, and no, it's not all money launderers and evil people, bad people investing in these things. So this is kind of cataclysmic collision of two different worlds, two very different worlds. Both have many different types of players, and I certainly in our community, I think it's very interesting to hear the different perspectives of what people, how they think it's going to play out, and how it should play out. There's vastly different perspectives on it.
Right. Now, could smart tokens also pertain to the idea that using smart contracts, you can add any logic, any features you like to a token to do anything you want, basically, instead of just being this dumb piece you pass around?
I think it's AI tokens really is what we're talking about, and new protocols that will provide verified market signals of utilization value or whatever, and math and algorithms and evidence will replace kind of sorcery, speculation, and waste and manipulation that currently happens in the markets today. Okay. We're basically the human BS is going to be, and we're going to really, things are going to get hardened up by math and algo, which is right up your alley.
Oh, so it's going to be like self-regulating, or it's a security. When we talk about using AI for these tokens, it's for security is one reason.
Well, it's for security, it's for forecasting, it's for big data analysis, it's for all kinds of things.
Okay.
It'll provide stability. At least this is what people like. I think there's a lot of ways it could play out, but I think, the integration of blockchain and AI and IoT and quantum mechanics, and all these things that we're moving towards in the future, big data.
Right.
It's going to be an interesting fusion, I guess, or convergence of different technologies that will fit together in different ways and augment each other. And the ideas of around AI having a role in blockchain and crypto and tokens. There's a school of thought that will allow for a smarter token economics.
Right. Well, I have to thank you, because I wanted to. You gave a good introduction to ICOs, and I wanted to make a comment about the future. And I think your vision of tokenomics, and then this idea of smart tokens and using AI in token economies, I think is an interesting idea for the audience to chew on. So thank you for enlightening us about that. So I think we've pretty much covered a lot of ground today regarding ICOs. Before we close, is there anything else that we missed, or anything else you'd like to say?
Not really. I think I'm really excited to be involved in the industry that I'm working in. I'm working with a lot of great people, and I'm working on a lot of projects that I'm really proud and happy to be part of. I've met a lot of great people. I think there's a couple projects that I point out if you want to see something interesting. One's called Chimera, CAERA. These guys actually built a coin called Hunter Coin, which is before Ethereum, so they have experience in building their own blockchain, which I always have a lot of respect for. A lot of projects are ERC-20 compliant, which are kind of like spin-offs of. It's a copy and paste job. It's not like, okay, it's a lot more than that, but essentially it's quite easy. But the guys that are building their own blockchains, like Skycoin.net, Chimera, those are kind of. I actually have a bit of. I understand the amount of work both those projects have put in 4 or 5 years, and Chimera's around gaming, Skycoin's around a whole new ecosystem. So, that's about it. That's all I really want to mention, and it's been a great show, and I appreciate the time, Christian, and I hope maybe we can catch up in another 6 months or a year and give another update.
Definitely. All right. Well, thanks again for joining us, and and so best of luck, and we'll talk soon.
Okay. Thank you.
All right. Bye-bye.